Good morning, good afternoon, and good evening. Welcome to everybody. Today we're going to dive into accounting and not just, demos on demos, but winning strategies that are going to help you scale. And today is really about sharing what's worked and what we've learned along the way. As our businesses have grown, accounting is one of those areas which best practices matter more at scale, especially when it comes to homeowner trust. So we're going to talk about that today. My name is Michelle Marquis, and I'm the brand ambassador here at Guesty. And I've spent we're not going to talk about how many years helping property managers and technology companies scale profitably, first as an operator and then on the tech side. So I've seen firsthand how the right can transform your business. System and processes can transform a business. I previously had a 3-year non-compete that once it was up, I started evaluating which property management system I wanted to align myself with. And I really did have lots of choices. But in the end, I chose Guesty, and I chose Guesty because of a whole lot of reasons of the product they have, the innovation they're doing, and the company they are. And I'm excited if you ever want to consider switching from one PMS to another, I'm hoping that the information I provide as I go along will help you make that decision. Today is designed to be practical. The goal is to help you walk away with a clear framework for what to look for in a PMS as it relates to accounting and how to set up your team for a strong support experience after you've gone live. So before we dive into today's topic, I wanted to take a minute or two to introduce Guesty to those of you who are not yet familiar with what we do. At Guesty, we're providing the short-term rental hosts and property management companies the most comprehensive and streamlined, I need to find another word there, set of tools they need to operate seamlessly, bring in more bookings, create optimal guest experience, and ultimately grow their business. So why should you care about these numbers? Sure, some of these are pretty impressive, but when you really look at, they're spending almost $500 million in funding to innovation into bringing new things to light and like last year they had 330 features, of which 70% of those were asked for specifically by clients. So that's why that almost $500 million matters to you. For today's topic, scales matters because strong support is not only a ticket-based, it includes onboarding, education, best practices, guidance, and a partner ecosystem that gives you flexibility as your business evolves. So we see the same pattern with accounting as companies grow. What works at 10 properties often starts to break at 50, and what works at 50 becomes risky at 200. And smaller operators usually rely on basic reporting, manual reviews, simple reconciliation habits. And at that stage, accounting is often about making sure that the numbers are roughly right and owners are paid on time, and that's about it. As the portfolio grows, the expectations grow. Owners become more investment focused, questions become more detailed, and the financial impact of errors becomes much larger. And at that point, operators need consistent reconciliation, clear separation of funds, and statements that are easy to explain without manual fees. Some of the innovation things that just came out allow you to even have homeowner statements that are customized by the homeowner. So, many teams focus on revenue growth first, but long-term stability usually comes down to the strength of the balance sheet and the discipline of accounting and the process behind it. And, strong accounting is not just a compliance requirement. It's a growth enabler. It builds homeowner trust, gives operators real visibility into cash flow, and creates the financial confidence to scale businesses without any surprises. So instead of thinking about accounting as a loop or a back office track, it helps to think about it as 4 pillars. First is financial transparency, clear, separate funds between owner funds and company funds. The second is reconciliation. What the PMS says you earn to match what you actually earned in the bank. Third is owner trust, because for most homeowners, the statement is the only window into your business, and one little mistake or one little misunderstanding can really ruin your owner's trust. Fourth is scalable reporting. Process that works at 20 units has to keep working at 200. And today's conversation is really about how those four pillars show up in real operations. So I'm excited to bring both of our speakers here. First, we have Aidan Grawl. He's the founder of Blue Gems Management. Aidan came into the industry as an investor, built his own portfolio during the early STR boom, then scaled that into a management company and now oversees about 180 units across Florida. Now, with a background in accounting, he evaluated multiple systems early on and has become a strong advocate for structured, transparent accounting processes that build owner trust within Guesty. And we are also lucky enough to have Wesley Hesker, who brings a deep finance and operations background into the vacation rental space. He works with a portfolio made up largely of investor owned, where accurate reporting and clear accounting are critical from day one. And having been closely involved in system implementation and financial processes, he offers a practical perspective on what accounting needs to look at as companies grow. And today we're going to talk about what trust accounting looks like in real operations, how it evolves as portfolios scale, and what habits help build long-term owner confidence. So thank you both very much for joining me. I know this has been a little bit of a road to get here, but thank you. Welcome. So one of the things that was really interesting to me is in general in the vacation rental industry, I think property managers accidentally become property managers. So they don't, go to college to become a property manager. They literally stumble into it, most of them. I know that's how I did. I thought I was actually running a hotel. And then all of a sudden not all of a sudden, but I didn't own my inventory. And so I had to operate differently than when I was running a hotel. But very rarely does somebody come with an accounting background into this industry and find out that that's kind of their sweet spot. So let's start with your paths into the industry. Neither of you came in the exact same way, but both of you ended up focused here. How did you get here, and what surprised you most once you were inside the short-term rental space? And Wesley, why don't we start with you?
Thank you. I have a background mainly with healthcare. I worked with a lot of doctors and had to sit and report to boards on, their activity. And I moved to Fredericksburg about 5 years ago for an opportunity in the telecom industry, and found myself looking into this and met with our founder, Matt, and was really intrigued with his business structure, his plan, as far as how he's scaling. I mean, we're talking about being on that investor side of the scaling. And interestingly enough, while you would think that it's not very much like anything else, you have a lot of very smart people here. There's over 71 millionaires located in the Fredericksburg area. It's the highest per capita concentration of millionaires in the state of Texas. So there's some very smart people here who are investors, and these people need clear, concise, easy to follow reporting and understanding. And I think that is very not too much different from what healthcare was like, because these people who are investors that want to see, you're doing a good job being entrusted with servicing them, they need to know that you have their best interest at heart. So I found that to be really interesting walking into this space. It was unexpected for me.
Hey, Aiden, what's your thought about what surprised you most when you were inside the short-term rental space?
Yeah, well, to start, thanks so much for you and the Guesty team for having me. I think you did my intro better than I could. We got started definitely in the boom, right? 2021, anyone can make money in the short-term rental space. We had quickly scaled a portfolio of about 20 homes. And then we started to realize we needed to hire a team to manage them because it was a ton of work. So we started to do that, started creating SOPs, building out the infrastructure. All of a sudden we realized that we had a property management company without any clients. So, to your point, I haven't met many people that, intentionally got into this space, and we were definitely in that category. It was definitely an accidental venture. And then we started to accept third-party clients probably early 2023. And we scaled pretty quickly from there, from about 20 to 180 homes in about 36 months. And so with that, I think the accounting infrastructure that you start with is very important when you're growing and scaling that quickly. In terms of the question on what was the biggest surprise, I would say the complexity. If I think about vacation rental accounting, and I came from corporate accounting dealing with hundreds of $1 million of expenses in the uh, the telecom industry, which sounds fancy, but that accounting was actually a lot simpler than vacation rentals, believe it or not. And the way that I always describe it is you have $1,000 reservation that comes in. There's 8 ways that it's being split. The property manager gets some, the manager gets some, there's a cleaning fee, there's taxes involved, there's a trust accounting element. So I think a lot of people don't realize how complicated vacation rental accounting is. And that was the biggest surprise for me. Like I thought I knew what I was doing coming from an accounting background, and I started in this industry, and I was like, wow, this is really difficult. And I think that's why a lot of people are always interested in the subject because it is very complicated.
Yeah. Kind of a side question that wasn't in our list, but do you both run P&Ls down to the property level?
We
Um,
do.
yes.
Yeah. So talk a little bit about that as far as like, why does that matter?
For
Well,
us,
Someone
I think it
who doesn't
matters
do it,
because
why does it matter?
yeah, I think it matters because we want to understand, how much money we're making per unit, for a lot of reasons, right? It's not simply just to know the margin, but I think when you think about where you want to focus your time on acquiring new units, you get to learn, okay, these units are performing the best. But then also, if we think about the standpoint of how complicated it is to manage that home, I really want to know how much I'm making because the team, customer success, guest experience, maintenance, they're all spending so much time on particular unit groups, right? And so I like to run the analysis of how much that property is making for us as the management company versus how complicated it is to run from an operations standpoint. And I think if you don't have that unit level P&L, you miss that granular detail.
yeah,
Wes, anything to add?
I would agree with everything that he's saying, and that when you're running these financials, your investors want to know how they're performing as well. And there's a lot of that feedback. You don't know when that's going to happen. So if you're trying to scatter to get this information because you're not down to that level and you're not reviewing it, and you're not seeing, how overall we're performing and which of your properties are your better properties versus some of the properties that maybe you're not doing well, they're struggling. How do you know to address with who what you're doing or how to maybe improve the dynamic pricing or increase ADR? You just don't know what you don't know, and then you're trying to struggle to find the details. So having that organized gives you the empowerment of being able to do real analysis and look at those numbers intelligently to see what's next. What can I do that's going to improve our position and help us continue on the trajectory of growth?
And I don't know this and I should. Wesley, you started just as you guys launched onto Guesty, so you don't have experience in other PMSs. But Aiden, I believe you do. And talk to me about, the difference between how difficult it is to get that information if you don't have a PMS that gives you the ability to track that thing, the expenses, for example, down to the property level in an easy way, etc.
Yeah, I mean, I believe you mentioned it at the intro, but I think it would be borderline impossible to scale. I think it works up to, like a 10, 15 unit portfolio. Sure. We actually started with the co-hosting model, which is even crazier from an accounting standpoint because the owners are collecting the revenue, then you're invoicing them, and it creates a whole bunch of cash flow complexities. But I say that to say, anything can work with a smaller portfolio. I think a lot
Sure.
of people struggle when they get to 40, 50 units. We came from OwnerRez before migrating over to Guesty, and the biggest thing there is we didn't have, real-time accounting. We didn't have an owner's portal for them to actually have, owner statements that were updated in real time and journal entries to be able to add expenses. And so it was a very manual, convoluted process. And I think it would have broken had we not switched, I would say around that 40, 50 unit mark, which is exactly what we did. It worked for a time period right around 50
Yeah.
units was when we switched over to Guesty, almost 3 years ago. And so since then, it's been a night and day difference in terms of the scalability going forward.
Good. Thank you. And Wes, as I understand it, you came on just as they were evaluating different softwares. And so your experience was you had accounting eyes, not property management eyes, as you were
Yeah.
evaluating different software. So you were very much like focused on, look, we got to have these things in accounting. And tell me, like, what stood out early on to you when you evaluated Guesty against the other softwares? Because I ask this because there are rumors that are like 2-year-old rumors around that Guesty's trust accounting doesn't work, that the accounting doesn't work. And, I know that those rumors are, like, I'm going to say old rumors, like 2 years or
Mhm.
something like that. But you just evaluated and then went live. So what stood out to you on the accounting side?
Well, so I did come into a position where they had already selected the software. I did get to look at the previous software. I had some issues with following that from an accounting perspective and all the things that it should be doing. And when I look at what Guesty has with the business models, especially that really set you up for success, and you can just go case by case testing it. I've done software implementation over the years, so knowing the different sort of things that we had to be prepared for, like the correct tax rates at the right locale on each one, so that we're reserving the right amounts, and then making the business channel set up correctly and assess the right fees. Dealing with Airbnb's change in their management structure was another hurdle, but the system's very resilient and flexible to it. And when you walk through the trust accounting of the transactions at the checkout, based on how you do recognize your revenue, it all flows. It flows down. And that's the nice thing is you can see it go through the different ledgers and flow through the statements to make sure that everything balances out. And it's very easy to work with. I found that I love the fact that you can kind of export out the information. So as somebody who's come in and had to do software implementations and integrations and making sure everything flows through dollar for dollar, it was a much easier process. It's been one of the better processes I've worked through in years, and doing it on a short time frame because I came in with just a few weeks before we went live on it. It was really interesting to see that all come about, take place, and the responsiveness to the things that we needed to change so that it gave us full visibility to every dollar. That was very helpful.
That's good. I know that I think you guys State of Texas had been on 6 different softwares over like a 10-year period. So if anybody knows what to look for, you guys do. So let's talk a little bit about trust accounting in general. And not all states are trust accounting states. Let's talk about why somebody would want to do trust accounting. And even if they're not required to, let's talk a little bit about the importance of trust accounting and, how do you use it to your benefit, even with, like I can think of ways as far as homeowner acquisition goes. But if you don't have trust accounting and don't have to, should you do it anyways and why? Either
Yeah,
one
I
of you
can
can.
I can go first on that one. I think the short answer is absolutely. And I view it mainly as a way to know where the cash is going. So the biggest thing about our industry is that we receive a lot of money that isn't ours. Kind of unique in some sense compared to other business models, right? It's you don't have a lot of models where you'll have $1 million of revenue and maybe only 30% of that is actually your share. And so if you're not allocating that correctly in terms of what goes to your P&L versus your balance sheet, I think you lose visibility into your cash flow. And that creates a lot of issues whenever a problem comes. So people don't have trust accounting issues if everything is going well, right? If the bookings are rolling in, the payments are processing, there's no major storms, everything's fine. Where you run into issues is not understanding how much you owe your owners at any given time whenever Stripe shuts you down or a hurricane comes or the bookings stop flowing in. As soon as the cash stops, you need to know at any point in time how much money is owed. So aside from a legal and compliance standpoint, I think it's really important for anyone who's serious about scaling their vacation rental management business to just understand where their cash is going. And I think our model is unique because a large share of it, in some cases 60, 70%, is not actually our cash, but rather belongs to the government for taxes, the owners for distributions, vendors for bills, and whatever the case may be.
Wes, anything to add there?
I think the cash flow is important because it's easy for a company to see all this cash that's coming in the door from reservations. And if you're not separating out what your liabilities are to your owners, what your liabilities are for taxes, for other fees, how do you scale a business to operate around that and do it right? Because when those tragedies come, which will happen, and seasonality comes into play, it puts an operation in severe jeopardy of risking themselves into a position where it's going to, one, impact the integrity of your trust accounting. Two, you can't scale to grow properly because you don't know how to separate out what's yours versus what is owed and entrusted to the folks that have put you in charge of operating their business.
Yeah. Um, so I'm gonna go back to a minute, back a little bit. Actually, no, I'm not. I'm gonna move forward. I was gonna go back to a previous question, but I'll keep on this track. So if an operator realizes they're in a situation where their accounting isn't clean, or they don't know what their cash position is, what's the first step of getting out of that? Where do you start? You want to
I
go
would
first?
say talking
Okay.
to an expert is probably the first step. I think there's a lot of things in our industry that you can do DIY, guest experience, maintenance. You can kind of figure out, test the waters, make mistakes, learn as you go. Accounting, in my opinion, is not something that you should learn as you go. I would recommend if someone feels it's a weaker area in terms of their expertise, they should consult with an expert. It's not something that you should do DIY because I think that foundation is so important to be able to scale, and it'll be significantly more costly in the long term than whatever you're going to pay for someone to set you up properly. And so whether that's hiring a fractional CFO, a part-time consultant, a controller to review your chart of accounts, depending on, how bad it is, that'll depend on where you start. But it's definitely not something that I recommend trying to learn as you go. Compared to other things, I think that that actually is a solution. It's how we've been able to learn. We've definitely learned from mistakes, but accounting is not one of those areas where I think it makes sense to do that.
There's not as much forgiveness in accounting if things get messed up. Wes, what do you think?
Yeah, you don't want to have any uncertainty in that. It's to be of processes that are set in place. Those are there to set you up for success in a business. And if that's a weakness or an area that is not really well understood, it's worth every penny to find somebody who can help you at least get the right processes set up. It doesn't mean that you have to have them 100% of the time. You have to have the right setup and make sure, and then periodically come in and check to ensure that nothing's changed majorly and dramatically. But having that organization, I think, is critical for success. You can't scale up without making sure that that piece of the business is done. It's everything that provides the success of the past to the future, and you don't really have wiggle room as you scale up because the dollars and the obligations get bigger, and it's easy to make a misstep in there and think that you have something lined up the right way when you don't, and that's going to really be a pain point without that. So I would say go seek out somebody who has that knowledge, that expertise, or can point you in the right direction. Go find them.
Good, good. Well, you both are consistent on that. So I'm going to ask one more question, and then I'm going to go to a couple of questions that the audience has for us. But what internal habits or processes have made the biggest difference in keeping accounting clean and owners' confidence? Maybe you each could give us two or three that are like, I'm going to say almost like standardized SOPs. Do these two or three things on a consistent basis. What are those things?
Yeah, I would say for us, the biggest thing was documentation. If I could pick just the most important thing that you can implement, we do not charge a single expense without having support for what we're charging for. So whether that's a maintenance expense, it'll have an invoice from a vendor. If it's internal labor, we'll have documentation around when they went to the property, who went there, what did they do. So documentation would be my biggest piece of advice. I think that eliminates a lot of the pushback we get, a lot of the conversations, and it increases our trust because it creates a very objective scenario. If you're explaining exactly what the expense is for, the homeowners don't always know that the expenses that they're getting charged for do not go to us as the property manager, right? There's a lot of expenses to be able to run a property. We have OTA fees, we have taxes, we have our commission, which is a very small share of the actual overall cost to run that home. So I think it's very important for them to understand and have the documentation and support to know that we're paying third parties to be able to run their property and that not all of the revenue stream is going to us as the property manager. And I think it creates a scenario where the owner statement becomes very black and white and there's no gray area.
Especially when you have the backup. Wes, what about you? What are one or two things that are habits or processes that have made a big difference?
Well, I think the fact that there's not a heck of a lot of margin when it comes to having to do things that require, repair, maintenance to properties, and the documentation there is important. It is, in fact, fruitful ahead of time, especially when we're talking about dollar amounts that might be, pretty decent in size. That could be upsetting if they don't have any knowledge prior to it. That's going to create an issue. And then who's left stuck with handling that bill if you don't have the approval? So the approval process is really important. Having a good software to track all that in from, if you're doing it internally, which we do a good deal of that internally, and some of it we outsource, but having that documentation is extremely important in that circumstance because that way you can show everything that was done. You can log it with pictures, times, approvals, everything's there so that once they get their owner statement at the end of the month and it's listed on there, if you need to go pull that additional documentation because, hey, they forgot about it or there's any other questions around it, everything's there. It's very simple to show them the details behind that, And then as far as assessing the taxes and everything else, it's really important that you have your good accounting structure in place. So you know each month at the end of the month, what is your liability that you have to pay out maybe next month, maybe next quarter. But being able to have everything structured very nice and neatly makes the focus on the business and continuing to operate the business the priority, not trying to go back and find documentation and figure out what happened here, because that takes away from your ability to run
Right.
and grow and be effective and efficient in a business where it's really difficult to get margin. So trying to, do that when you don't have much margin anyway, erodes it further. And that's just additional cost to the business that it doesn't really need.
Yeah, and I know that Guesty has only recently rolled out a new product where you can, I think it's called Guesty Card, where you can categorize expenses to the individual home with receipts. But I think you guys either, I think you both use different companies for that
Mhm.
currently. Who do you use and how well does it work?
So we use,
I think that Aiden uses Top Key, but I'm not even positive. And then Wesley, I'm not sure who you
well,
use.
well, for the maintenance, we use Breezeway
Sure, of
to
course.
take everything, categorize it, and log the time that the maintenance is being done, and any questions around all that. As far as the expenses that we are using on behalf of every, I found an easy way of using Expensify that can classify everything. We can tag our expenses so that they properly get assigned in Breezeway. So we have a check in there to make sure that we're not missing anything. That was just something that I, recently was able to get going and implemented in there because we didn't really have a good way or a good system set up, good process to make sure
Yeah.
that we're tracking for those things. And there's a lot of automation features with the softwares that we do use, even in QuickBooks and pulling from our different cards to be able to get it to the right category pretty quick. And then we have, manual process to make sure everybody's going back through that and, validating, hey, we have this in the right place.
Well, and I know that Guesty has a really robust API with Breezeway, which allows that information to then flow through to the owner statement. So that's pretty darn handy.
Yes.
Aiden, what about you?
Yeah, and then we've been on Top Key now for, gosh, almost 2.5 years, way before the Guesty expense management product came out. So we've been running with them, and it's a game changer. I couldn't recommend whether it's Guesty, Top Key, Expensify, Ramp. You need a tool to be able to automatically categorize expenses based on which card you're using, and then be able to push that expense over to the owner statement. Otherwise, you have a Google Drive or a Slack process that's very manual with a lot of people involved. So I think the only scalable model on the expense side is software that allows you to tag what property the expense is for, and then a direct integration to guess the accounting to be able to charge it and support it for the homeowner.
Good. Well, we have, as you guys both know, a whole list of questions, but I've got some pretty rich questions from the audience that I think will bring more value. So from Patricia, she said, can you go over how you calculate P&L while factoring in fees, taxes, payout, net versus gross revenue? How do you each calculate that? What goes where?
Wow, what a great question. And I think it goes back to the original point of why vacation rental accounting is so complicated, because in other business models, you don't even get that question, right? So the short answer is that if the income belongs to the property manager, it belongs on your P&L. If it belongs to the government or the homeowner, it belongs on your balance sheet, right? So if we're talking about fees, it'll depend on whether or not you as the property manager get that fee. And this is where you're gonna want to make sure that your guesty business models are set up correctly. So I think a lot, like Michelle, one of the things that you and I talked about is I think people struggle when they're onboarding with guesty accounting. They don't understand how the business model function works. It's really hard for them to understand where all the money is being mapped. So for example, if you as the property manager collect the cleaning fee, that should be in your business model going to the property manager, and then hence it should go on your P&L as income. Taxes, on the other hand, are being paid out to the local government on behalf of the homeowner, so that does not go on your P&L. And then the payout should actually also go on your statement of cash flow or your balance sheet in terms of what money you owe the homeowner. And that'll be net of, the gross revenue minus the management fee that goes to the property manager, and then any OTA fees or other fees that you're charging them for operating costs. So really important to make sure that only the income that you're designating in your guesty business model that's being routed to the property manager, that revenue should be going to your P&L, but nothing else.
And you would consider that net revenue.
Yeah, net revenue is a tricky definition because I think you ask five people and they all have
I
different
know.
explanations of
That's
what
why
they're
I
calling net
asked.
revenue. But I think one of the common things that we see, which, I wouldn't say that it's necessarily incorrect, but I see a lot of property managers put owner payouts on their P&L as cost of goods sold, meaning that they report the gross revenue and they put owner payouts as COGS, which, talking to some industry leaders, is the incorrect way to do it, because technically you're overstating your revenue, right? You're not actually reporting all of the gross booking revenue that you're receiving on your P&L. You as the property manager, depending on your take rate, depending on how much of that reservation revenue you're receiving, should really on average only be between 30 and 50% of the total gross booking revenue. And a lot of
Good.
people make the mistake of reporting everything because it's simpler, but it's not actually correct from an accounting standpoint.
That's really good. Wes, anything you want to add there, or that you do differently?
No, I agree with having the balance sheet reflect properly what your obligations are at the end of each month, because that really does help with the cash, understanding of what your cash flow truly is
Hmm.
and what you owe to other people. The business models are fantastic at just one step at a time, allowing you to decide where does this go in the flow of the funds. And I think that it makes it extremely transparent. And as long as you understand the basic structure of the flow of funds and where that's going to end up.
You guys have talked about QuickBooks, but the question is, are you all using QuickBooks and Guesty? have the two integrated, which I can tell you that there is an integration between QuickBooks and Guesty. It only was, I think, live like less than a month ago. But what have you been doing in Guesty versus QuickBooks? And, how well are you connected between those two things?
Yeah, great question. I'm loving these questions. So I think you need to think about QuickBooks completely independent of Guesty because that's your what you would call accounting ERP. You have payroll, you have profits and loss, you have a balance sheet. You don't have those things in Guesty accounting, right? Guesty accounting allows you to have owner statements and be able to allocate revenue to different line items, but there's no banking detail, there's no reconciliation, there's no P&L, there's no balance sheet in Guesty. So whether it's QuickBooks, whether it's NetSuite, Sage, Xero, there's a bunch of different accounting softwares out there. But guess the accounting, to be clear, won't replace the actual accounting software to run all those financial statements. And then the key thing is to the question is how do you integrate the two? So for us, we use a tool called VR Platform to essentially push all of the Guesty data into QuickBooks to allow us to then reconcile all of our reservations to the cash that we're receiving. And there's other ways to do that. You can import journal entries manually. You can use Excel. And I know that the Guesty integration with QuickBooks is a new feature as well. But the point is that you're going to need all the data in Guesty to be fed into QuickBooks if you want to have a real-time, accurate balance sheet reconciliation and P&L.
And I think it's like $100 to have the integration. So I mean it's pretty reasonable. So I have a question that somebody wants you to define trust accounting in this context. So can you explain easily and quickly what trust accounting means?
Yeah, trust accounting, the way to think about it is just really separating the money that belongs to you versus money that doesn't. And again, I think it's unique to our model, right? Because if you're a restaurant, right, selling pizzas, simple business model, you don't really collect revenue that's not yours, right? The money that you receive from the customers, you pay your costs and you have your profit left over. Our model is a little bit unique because we're receiving money from guests through a third party OTA, and a large portion of that revenue has to be paid out to the homeowners. So trust accounting allows you to separate what you would call your operating account from your trust account. And operating simply means money that belongs to you as the property manager, and trust account means belonging to third parties. And third parties is not just owners, right? You have taxes, you have the government, you have vendors, and any of your operating costs, right? So if you're paying software, if you're paying employees, your expenses as the management company should not be running through your trust account. So that trust account should have deposits that belong to the homeowner. And then the expenses that are being paid out of that account should be to third parties not related to the property management company.
Great. Thank you. Hopefully that answers the question. I have a practical question, and that is, do you both mark up your expenses and to your owners? And if so, how much?
We
Wes,
do.
start?
Can you hear me okay, or am I garbled? I can take
No,
my
it's
camera
good.
off. Okay, good. Connection's a little better. We do take markup on it, and it's all contractually in each agreement that we have with owners as far as like what our standard markup will be on services that we get their approval and provide, or anything that's under a certain threshold limit. Generally, that's about a 20% markup for us, just to make sure that we're covering our additional costs around that because there are labor costs associated with these things that we have to cover. And that kind of helps us keep that, from being a position of loss for us where we're paying out the expense, at an additional.
Good. Aiden, anything you want to answer or like what is, I don't think we got a number out of Wes. 20%,
Yeah,
15%.
no, I said 20 is
Oh,
generally
you
where
did.
we
Okay,
budget
I'm
it
sorry.
under.
I'm
Yeah,
sorry. Aiden,
sorry.
what about you?
We do not. We do not. We've gone back and forth on it. I think we prefer to charge the amount that we're actually paying when it comes to vendors. And I would say one of the reasons why we don't do a markup is because we do, I would say, 80 to 90% of our maintenance internally, meaning, on salary with our internal staff. And so we charge per hour. And so it kind of removes the need for there to be
Yeah.
a markup. And then if we get into marking up materials, I think we can get more pushback from the homeowner. So I think our perspective has been less questions, less likelihood of churn by not having the markup. So we're kind of balancing the LTV of the client versus making more on the short-term margin. No right or wrong answer. I think it's just depending on, what business model you're going after.
And let's add on to that. If you are charging a homeowner for something, let's just say that, like there was an area rug and it got chewed up. It got something happened to it and you had to replace it. Do you notify the owners that there's something new on their statement so that there's no surprises, or do you just put it on their statement?
We've recently started to notify above a certain threshold. We started to do a few things that have been really helpful. One, track the month over month change in maintenance cost that we charge, per month, which is mainly the hourly rate from our team. And then anything above that threshold, we've sent an email before the statement goes out. Hey, Mr. Owner, just wanted to put on your radar that we had X, Y, and Z happen at the property. And then what we found that's really helpful is adding the context that they don't have in terms of why we made that decision, right? So maybe we saved a refund, maybe we saved a bad review, maybe that decision to spend that additional money on the inventory or the maintenance issue allows us to keep the long-term revenue of the home. And if you just send the statement without that context, there might be a little bit more pushback. So we've started to implement that. And it really just comes down to what we define as a threshold that we feel is above, an unexpected amount that they would have questions on. So we feel that the more proactive we can be, the easier it will be for the team because it's more likely they're going to reach out anyways. So if we reach out to them, we're more or less, spending the same amount of time, but we're getting a much better result because they don't feel like they were blindsided.
Yeah, that's exactly how we handled it as well. Um, I I have somebody that wants to understand how you guys have your setup, what your business model is in Guesty. And I know that Aiden, you for sure said after the webinar, reach out to me for anything detailed that you want to talk about. So I'm not going to answer that live, but just know that Aiden is happy to meet with you. Okay, a couple more questions. If we zoom out, what's the biggest mindset shift operators need to make when it comes to accounting as they scale?
I think it's shifting away from accounting being an admin task to more of a strategic function. I think a lot of people view accounting as like a check the box thing, right? Hey, I did my understatements. Hey, I did my bookkeeping. But I think accounting can be more than that. I think it can be a strategic way for you to grow for really two reasons. I think one, you can improve trust, right? We talked a lot about homeowner trust, which in turn would decrease the likelihood that the homeowner will leave or churn. But I think a lot of people don't talk about the likelihood that you're going to make better decisions with better accounting. If your financials are not accurate, it's going to be really hard for you to make better decisions in your business. So I think a lot of people underestimate the power of accurate, real-time, speedy financial statements to allow them to scale and make the right decisions. And I think shifting away from accounting as, simply just an admin task, simply just a cost center, and more of a strategic function that allows you to make better business decisions for you to scale.
Good.
I think at a larger scale, it really helps you understand the growth and the retracements that naturally are part of the business. And without that kind of background, without that kind of training, it's really difficult to arrive at it because you don't know all the pieces that are, moving at a given point in time. And it can get a little bit overwhelming and complicated to somebody who's not familiar in that area. I mean, where you are familiar, you have an advantage because you can see how the ebbs and flows do work from a seasonality standpoint, or if you have an interruption like a hurricane or fires, extreme heat, extreme cold. These are things that are unanticipated, and it's the unanticipated things that people often don't put into the equation or realize that these are going to come into the picture. When you're scaling at a larger size and growing, these are things that can have a significant impact to your business if you're not. So
Good.
there's much more from an analysis standpoint that I think accounting can provide to get you there. And you pair that well with how you're running the listings, how well they're performing. It gives you an edge to your business because at the end of the day, one thing that matters is what do you take home? What do they take home? And like I said, as far as the investors who are involved, they're very smart people, they're very financially literate. They want transparency, they want things that are straightforward, they want their agreements to be followed to the T, where they don't have questions at the end of the day. They have trust, they have confidence because you have everything professionally presented to them. And when they have a question about how are they doing, what do they see, coming down the road? Have a way of being able to answer those questions that if you're not really suited to that, it's going to be difficult to get that confidence out of them when you have that conversation you're fumbling through. So I think it's really critical core to be successful because dollars are what makes the business perform at the end of the
Um, that's good. That leads me to like you do with investors. Aiden, you are your own investor, plus you have, other property manager or other homeowners. But should you treat homeowners in general more like investors? Like, because I don't think that that's currently how things are. Do you think that property managers would do well if they reported things like these homeowners are investors? What do you think?
I would say it probably never hurts, right? I think, in our experience, you have really like two overall categories of a homeowner. I think you have the investor avatar and you have the second homeowner that's not really looking at the financials in as much detail. Maybe they're not looking for cash flow, they're looking to cover, X percent of the cost of just owning that home. It's more of a vacation home for them and their family. But I don't think that even the vacation homeowner avatar would want less information and less accurate financial data. And so at that point, you might be serving the investor client, but you're also benefiting, all the types of owners that you're serving. Because we lean heavily on the investor side, but I would still say 15-20% of our homeowners are, vacation second home style. And I think they appreciate the level of detail that we provide on our accounting. And so I don't think that there's a downside of truing up your books, providing more support, more proactive communication. There's really just not many cons when we're talking about improving our accounting processes.
Yeah, good, good. Well, we have more um, questions that we could be on for another hour easily. And so those of you who have questions in there, some of them are pretty detailed. We will either get you the answers or maybe even Aiden or Wes, we could send them to you and you could help answer them from a user's point of view. And in the meantime, I want to share with you guys the Guesty Switch PMS guide. So if you're not currently a Guesty client and you want more information about how to really look at each area of the product, because when you're switching, it's a pretty big decision and you should be doing it in a very, I'm going to say, kind of formal way. So in the PMS guide, we talk about that. And then the other thing is that anybody who is a client or going to be a client, we have Guest Eval coming in Madrid. Yay. So September 16th through 18th. And I know some of us are getting married or some other odd thing, so they can't make it. But anybody who can come, there's a QR code to get more information. And I want to thank both my guests. You guys were like the perfect candidates, and you both said yes. So I'm really appreciative.
Thank
There
you.
are a few of you who've already asked for Aiden and Wesley's email. Wesley hasn't given us a permission on that, so you'll get Aiden's for now.
More than welcome to. I'm happy to help. Thank you so
Okay,
much for having me. Really
great.
appreciate it.
Yeah, great. Well, thank you both. Make it a great day. And I think we will call it the end. Bye,
Amazing.
everybody. Thanks so
Thank you,
much.
Michelle. Thanks, Guesty.